Welcome back to the deep dive. We're here to plunge into the developments that are really shaping things, cutting through all that noise to give you insights that, well, hopefully matter. And I'm genuinely excited about today's deep dive. We're looking at something from a name everyone knows in digital payments, PayPal. And it could fundamentally reshape how millions, maybe even billions of people engage with digital assets. Okay, let's unpack this. PayPal just launched a new feature. They're calling it Links, and it's all about simplifying peer-to-peer crypto transfers. So the big question for us today isn't just what they did, but why this, seemingly simple update might finally be the catalyst, the thing that pushes crypto truly mainstream for everyone, not just the tech-savvy folks. We're going to break down the mechanics, the strategy behind it, and the ripples it could send across the whole digital economy.
Yeah, what's truly fascinating here, and this is what really sets it apart, I think. This isn't just another small crypto feature from some startup. This feels like a very deliberate, strategic move by a massive player in traditional finance, a company that already handles just an astronomical volume of transactions worldwide. So PayPal stepping deeper into crypto payments, especially with something designed to be this accessible, well, it's a potential game changer, a really big one. We're not just looking at what they announced. We really need to examine why it matters so much. For everyday users, people who've maybe been curious but hesitant about crypto, and of course for the wider crypto market and just the way our digital economy keeps evolving, it feels like a pretty significant shift in perception and potential use.
Absolutely. And before we dive headfirst into all the fascinating details here, just a quick note for you, our listener. If you find these deep dives valuable, if you get something out of them, taking just a moment to like, share, subscribe. It genuinely helps us a lot. Your engagement, it really boosts our visibility, helps us reach more curious minds like yours, and honestly, it lets us keep bringing you these in-depth explorations, especially in this super fast-moving world of crypto and digital finance. So yeah, your support really fuels what we do here. Thanks for considering it. Okay, section 1, the links feature. Let's get right to the core of what PayPal actually announced. They've rolled out this new thing, links. And honestly, it sounds pretty intuitive. We're talking about making peer-to-peer, P2P crypto transfers possible using just a simple shareable link. Think about how easily you might share, I don't know, a Google Doc or a Dropbox folder link with someone. PayPal's basically trying to bring that same level of ease to sending digital currency.
And that word ease, that's really the heart of it, isn't it?
Yeah.
The whole mechanism is designed to hide or abstract away the complexities, the very things that have been, frankly, huge barriers for the average person. Traditionally sending crypto meant getting someone's wallet address, that super long string of letters and numbers, get one character wrong, and poosh, your funds could be gone forever. Irreversible.
Right. That's terrifying for most people.
Exactly. Or you deal with QR codes,
Right.
which are, okay, a bit better, but still maybe not quite the seamless experience people expect from digital payments today. PayPal's links, it just sidesteps all of that.
So if I'm getting this right, instead of me having to ask you for your complicated wallet address, I just generate a unique link inside my PayPal app. And when I share that link with you, it has all the info needed and you just click it to claim the crypto.
That's the idea, yeah.
That seems huge. It means that fear, that anxiety people have about sending money into the digital void, hitting the wrong address, that's largely gone.
It should be, yes. It tackles that psychological barrier head-on, which is maybe just as important as the technical simplification.
That makes sense. People avoid things that feel risky or complicated, especially with money.
Absolutely. Think about all those common anxieties. The fear of irreversible transactions, the confusion around gas fees like on Ethereum. What are they? Why do they change? Why do I have to pay them? Or even just the daunting task of managing your own private keys, your seed phrases, if you're using a self-custody wallet. These aren't small things. They're significant hurdles. They've kept millions of potential users completely on the sidelines. PayPal's links feature, it doesn't just simplify the action of sending. It tries to fundamentally re-engineer the experience to remove those points of friction and confusion.
That's a really important distinction. It's about the user's perception of complexity, not just the underlying tech. So, okay, which cryptocurrencies are we talking about here? Is it just Bitcoin or?
They're starting, I'd say, strategically. Right now, it supports Bitcoin, BTC, Ethereum, ETH, and this is key, PayPal's own stablecoin, PYUSD. They also mentioned other supported cryptos, which definitely signals they plan to expand this later. That's something to keep an eye on.
Okay.
But the main thing, the real aha moment for users, is that you can now send or receive crypto using a method that feels as familiar and non-scary as clicking a link. just like you might already do to get paid back by a friend using regular PayPal or Venmo. This isn't just making crypto possible in PayPal, it's making it feel simple, making it feel like they're existing, very successful payment systems.
It really is a powerful comparison to Venmo or just standard PayPal payments. When I send money on Venmo, I just need a username, right? No complex bank details. PayPal seems to be directly copying that successful user-friendly model over to crypto, hiding the blockchain complexity behind a clean interface. Which I guess brings up a big question for us. How quickly will PayPal's massive user base actually start using this? Will the comfort and trust in the PayPal brand be enough to overcome any lingering skepticism about crypto itself?
Well, that's exactly the bet PayPal is making, isn't it?
Mm-hmm.
The potential for onboarding new users here is just profound.
Yeah.
Because it dramatically lowers that technical barrier to entry.
Yeah.
Imagine someone who uses PayPal every day, maybe for shopping online, sending money to family, but they've never touched crypto because wallets, addresses, gas fees, it all sounded too abstract, too risky.
Yeah, that's probably a lot of people.
A huge number. Now, with just a simple link, they can receive, say, Bitcoin or PYUSD, with basically the same effort and the same level of trust as receiving regular dollars. This move could genuinely attract a massive wave of new crypto users, pulling them in from PayPal's existing ecosystem. People who were previously just too intimidated to dip their toes in. We could be moving from a niche tech for early birds to a real mass market utility.
Okay, so this leads us right into section 2, why this matters, unpacking the real impact. And this is where it gets really interesting, I think. Like you said, it's not just a new button. It feels like a deliberate strategy to remove that friction for, well, normal people, non-techie users. And by doing that, PayPal is actively pushing crypto into a space where it could actually become mainstream, making it feel as everyday, almost boring in a good way, as sending an email. But what are the deeper ripples in this grand simplification?
Yeah, that grand simplification is the core idea. For years, technical complexity has been the main gatekeeper, right? It limited crypto mostly to the early adopters, the tech folks, the speculators. Engaging with crypto meant understanding public keys, private keys, different blockchains, transaction hashes, figuring out decentralized wallets. It was a lot.
Definitely a steep learning curve.
For sure. This links feature directly tackles that by hiding almost all of it. It shifts the burden of understanding the tech from the user onto the platform. It's a bit like how your email app handles all the complex internet protocols behind that simple send button you click. You don't need to know how SMTP works to send an email.
So it's making the complexity almost invisible, letting people focus on the what sending money rather than the how. Is this kind of like how other big technologies went mainstream?
Exactly. It feels very much like a step towards democratizing crypto, echoing patterns we saw with, say, the internet itself. Remember the early internet? Command lines, text interfaces, mostly for academics and engineers.
Right, not very user-friendly.
Not at all. Then came graphical interfaces, web browsers like Netscape. And suddenly, boom, everyone could use it. PayPal's links feels like it's aiming for that kind of transformation for crypto payments. It's trying to be that user-friendly interface for digital assets, opening the door to a massive audience that found it too difficult, too scary, or just too much hassle before. The real trick isn't just making it easy, it's making it feel familiar and safe.
And beyond just making it easier to use, could this simplification actually change how people think about crypto, moving it away from just being a risky investment?
Well, absolutely. And that could be a huge shift.
Yeah.
For many people, Bitcoin or Ethereum are still mainly seen as these volatile things you invest in, hoping the price goes up. Something you buy and hold or trade, not really something you use for everyday stuff.
Yeah, more like digital gold than digital cash for most.
Precisely. By making P2P transfers as easy as sending a text message, PayPal is actively positioning crypto, especially stablecoins, like their own PYUSD, as practical tools for routine transactions. This starts to rebrand crypto in the public mind, from a niche investment to a functional everyday utility. That's a massive psychological hurdle to clear for mainstream adoption, moving it from the trading screen to just paying your friend back for pizza. And the real insight here might not just be that PYUSD is stable, but how PayPal's regulated approach and its built-in distribution creates this sort of psychological safety net of trust, something that even bigger stablecoins struggle to replicate for the average Joe just because they don't have that household name recognition like PayPal.
That makes a lot of sense. Okay, let's pivot slightly to subsection 2.2, the network effect. Because the scale here is just mind-boggling. We're not talking about some small startup trying to get users. PayPal already has this colossal global footprint, over 400 million active users worldwide. That's just It's a massive built-in audience potentially ready to start using crypto. How does this network effect factor into their strategy?
You're absolutely right to emphasize the scale. It's probably PayPal's single biggest advantage in this whole play. That existing user base is what we call a massive onboarding funnel. I mean, think about it. Even if only a small percentage, let's say 5%, maybe 10% of those 400 million users decide to try sending or receiving crypto using links.
That's still 20 to 40 million people.
It's exactly 20 to 40 million new crypto users, or at least new crypto transactions, almost overnight. That just dwarfs the user acquisition efforts of most dedicated crypto platforms, which often spend fortunes trying to get new signups. And these PayPal users, they don't need to sign up for anything new. They don't need to go through a whole separate KYC process. They're already in the ecosystem. Their bank accounts or cards are already linked. And crucially, they already trust PayPal.
That trust factor does seem undeniable. PayPal built its reputation over decades for secure payments. But isn't there still maybe some hesitation about crypto itself, even among PayPal users?
Oh, for sure. That's a real challenge. But PayPal's established brand trust, combined with their very deliberate compliance-first approach, which we saw with their stablecoin launch and their whole crypto strategy, seems designed specifically to overcome that skepticism. People are naturally wary of giving their money to unfamiliar services, especially in the crypto world, which can seem volatile or complex. But these users already trust PayPal with their regular money, their bank details, their cards. That existing trust acts like a bridge. It makes it much easier for them to extend that trust to handling digital assets within the same app they already use and feel comfortable with. The clever part might be activating what you could call dormant financial intent. People already using PayPal daily might just stumble upon crypto, try it out because it's easy, and become active users almost without realizing they've entered the crypto space.
So it's leveraging that existing comfort zone. We saw something similar with Square's Cash App, right? Bringing Bitcoin to millions. Is PayPal's potential even bigger?
You could definitely argue that yes, potentially significantly bigger. Cash App was huge, no doubt. It played a massive role in onboarding millions to Bitcoin by making it easy to buy and hold within a popular app. But PayPal's potential might be even larger. Why? Well, its broader international reach, its deeper integration into online checkout everywhere, and maybe an older, more diverse user base compared to Cash App's initial demographic. They're tapping into this gigantic existing network and a deeply ingrained habit of using PayPal for all sorts of payments. It suggests just an unprecedented opportunity to drive widespread crypto engagement. This isn't just about giving existing crypto folks another option. It's about converting the crypto curious, maybe even the crypto indifferent, into active users almost by osmosis, just because it's right there on their main payment platform.
Okay, that leads nicely into subsection 2.3, PYUSD's ascent. Because this move seems massive for PayPal's own stablecoin, PYUSD. It's been out for a little while, but with links, it feels like PYUSD suddenly gets this huge boost in relevance. It shifts from potentially being just another token you trade to becoming a real, usable, everyday payment option right there inside PayPal. How does this redefine its utility?
You've absolutely nailed it. This is where that original promise of stablecoins, the whole reason they were invented, starts to look like it could actually happen on a mass scale. Stablecoins were meant to give you the benefits of blockchain speed, low cost, global reach, programmable money, but without the wild price swings of Bitcoin or Ether.
Right. Stability was the key selling point for payments.
Exactly. Their main purpose was always envisioned as a reliable way to pay for things, send money across borders, use in commerce, not just be a speculative asset, but honestly, widespread practical use for everyday payments. It's been pretty limited, often stuck in crypto-native circles on exchanges or tied up in complex DeFi stuff.
So Links basically creates a simple, direct highway for PYUSD to fulfill that original mission, moving it out of the crypto bubble.
Precisely. The Links feature gives PYUSD a direct, practical, and incredibly user-friendly path to becoming that medium of exchange. Instead of needing to move PYUSD to some other wallet, figure out network bridges, understand token standards, users can just send or receive it as easily as they send dollars or euros within PayPal now. That immediate utility, built right into a massive trusted platform, gives PYUSD a serious competitive edge. And if you connect this to the bigger picture, this positions PYUSD to directly challenge the big dogs like USDC and USDT, especially in the consumer payment space. While USDC and USDT are giants in trading and DeFi liquidity, getting them seamlessly into the hands of everyday consumers for simple payments isn't nearly as smooth as PayPal can now make it for PYUSD. PayPal isn't just launching a coin, they're building the consumer railroad for it.
And PayPal's whole approach with PYUSD being very focused on regulation and compliance from the start, does that give it another advantage in this traditional finance world?
Oh, absolutely. That's a huge factor. PayPal's regulated compliant stablecoin plugged into this super user-friendly payment system. It could very well set a new benchmark for how stablecoins get adopted in traditional finance. PayPal has been really careful with PYUSD emphasizing compliance, transparency, regular audits. That resonates with regulators and traditional banks who are often pretty wary of the wider crypto space. By showing that a big regulated company can issue and integrate a stablecoin safely into a mass market product, PayPal could really pave the way. It might encourage other financial institutions to follow suit and could even influence how future regulations are written. It kind of moves stablecoins out of the perceived Wild West of crypto and into the more familiar territory of regulated everyday finance. That could massively accelerate their journey from the fringe to potentially being a core part of our digital wallets.
Okay, let's move into Section 3, the ripple effects. How does this impact everyone else in the ecosystem? Starting with subsection 3.1, what about Bitcoin and Ethereum, the big two? Does PayPal making it easier to send them around change things significantly for BTC and ETH?
It's a really good question. For both Bitcoin and Ethereum, making them more accessible via links could fundamentally boost what we call transactional demand, moving beyond just investment or speculation. For a long time, most people interacting with BTC or ETH were buying to hold, hoping the price goes up, or trading it, actually using it for peer-to-peer payments or buying stuff. Possible, sure, but kind of niche because of those technical hurdles we talked about. PayPal simplifying that changes the game.
So the idea is people might actually start using Bitcoin and Ethereum more for small payments, not just holding them as assets.
Exactly. Imagine millions of PayPal users suddenly finding it super easy to send, say, $5 worth of Bitcoin or Ether to a friend to split lunch or contribute to a group gift. It introduces this whole new layer of utility that goes way beyond just hodling or trading on an exchange. This increased transactional use, even if it starts small, could actually influence long-term price stability. Well, instead of prices being driven mainly by speculative hype or news cycles, having a consistent base level of actual transactional demand could create a more stable floor for these assets. It might lead to different market behaviors. Maybe people are less likely to panic sell during dips if they also see crypto being used practically every day right within their PayPal app. We might also see a shift in who holds and uses these assets, bringing in a much wider, more diverse group than just the investment-focused crowd. It doesn't mean Bitcoin's going to replace dollars for buying houses tomorrow.
Right, probably not.
But it definitely pushes it into the realm of microtransactions, casual gifting, maybe small online purchases. And that's a really powerful foot in the door for broader everyday utility.
But is there a counter-argument? Like, will serious users still prefer their own wallet's self-custody for larger amounts? And if this is mostly about small transactions, does it really move the needle for, say, institutional adoption?
That's a very valid point. For significant amounts, or for users who are really committed to that core crypto ethos of decentralization and not your keys, not your coins, yeah, PayPal's custodial approach might not be their first choice. The great thing about crypto is that choice exists. Many will absolutely continue to value the total control that self-custody provides. So, yes, these simplified links transfers are likely aimed initially at smaller, more casual amounts where convenience is king. But even those small transactions, when multiplied by millions or tens of millions of users, can have a huge aggregate impact. They introduce vast numbers of people to the concept of using crypto, maybe encouraging them to explore more later. For institutional adoption, it's a bit different. This move validates the tech and the possibility of regulatory compliance, which is good for institutions. But that's the different kind of demand than the retail transactional demand we're talking about here. It's validation on two fronts, but with distinct immediate effects.
Got it. Okay, subsection 3.2. The brewing stablecoin wars. We touched on this, but let's dive deeper. With PYUSD getting this utility boost, it really feels like it could challenge the existing giants, USDC and USDT, especially in the payments space. Are we really seeing the start of a major battle here?
Oh, absolutely. I think this is effectively the opening salvo in what could become a significant stablecoin war, specifically fighting for dominance in the payment utility arena. Right now, USDC and USDT are the undisputed kings. Huge market caps used everywhere on crypto exchanges and DeFi, even some institutional stuff. They are the default digital dollars for crypto-native activities.
Hmm.
But interacting with them usually means dealing with external crypto wallets, exchanges, understanding networks, getting them into the hands of your average consumer for a quick payment. Still often a multi-step process.
Whereas PayPal comes in with this massive advantage. It's already built in, native integration on a platform people use constantly and trust.
Exactly. That's the key weapon. PayPal gives PYUSD this direct line to consumers by leveraging that huge user base and the familiarity of the platform. Native integration is the killer app here. Users don't need a new app, a new wallet set up. They don't need to learn about bridging tokens. PYUSD is just there, like another currency option in their balance, woven into a payment flow they already know. That ease of use, that immediate availability could let PYUSD carve out a really significant share of the payments market, potentially eating into the territory currently held by USDC and USDT, which require more crypto savviness from the end user. It's a fight for that crucial last mile of consumer adoption.
And we have seen other stablecoins like USDC making headway in specific areas like gaming or online commerce, right? Does that prove the demand is there for PYUSD to capture, but maybe on a much bigger scale?
It absolutely validates the underlying demand. The fact that USDC, for example, has found real-world traction in gaming and some e-commerce shows that people do want a stable digital dollar for fast, efficient transactions. PayPal is now tapping into that same proven demand, but they're bringing the added weight of institutional trust, regulatory compliance, and just unparalleled convenience for hundreds of millions of users. So yeah, the race to become the dominant digital dollar for everyday retail use, it's officially on. And PayPal just entered with a very powerful offering, not just the coin, but the whole integrated payment system for it, attached to a massive ready-made audience. This isn't just about who has the biggest market cap anymore. It's about who owns the default digital payment rails for consumers.
Fascinating stuff. Okay, subsection 3.3, signals for traders and market watchers. For those of us watching the markets, whether actively trading or just trying to understand the bigger trends, what should we be looking for? What are the key signs that this PayPal mood is really making waves?
Yeah, this is crucial because the signals might be a bit different from typical crypto-native indicators. Traders and watchers should definitely look for PayPal-driven spikes in volume, specifically in retail adoption metrics. That'll be the clearest sign if this links feature is truly catching on with the mass market. We're talking about measurable increases in transaction activity that you can reasonably attribute to PayPal's ecosystem, not just general market buzz or big institutional moves.
Okay, so beyond just looking at the price charts, we need to dig into actual usage data tied to PayPal. What specific data points should be on our dashboard?
Right, so a few key things to monitor. First, keep an eye on PayPal's own reports' user base growth, and especially any numbers they release about crypto adoption within their platform. And that's proprietary info, so we depend on their disclosures. Second, track PYUSD's market cap very closely, especially compared to USDC and USDT. Is it growing significantly? Is that growth sustained? And does it seem correlated with activity on PayPal? That would signal its rising influence in payments.
Makes sense. What else?
Third, look at the on-chain data for PYUSD itself. How many unique wallets hold it? What's the transaction count on the blockchain? Are we seeing new integrations outside of just PayPal? This tells us about its real-world movement and utility beyond PayPal's internal system. And finally, keep watching the retail transaction volume for Bitcoin and Ethereum. If PayPal really sparks more transactional use, we should see an increase in smaller, more frequent BTC and ETH transactions. That would suggest payments are becoming a more significant use case alongside investment.
And how do we put these numbers into context? Are there past examples we can compare this to?
Definitely. To really gauge the impact, I'd strongly recommend comparing PayPal's rollout with previous big fintech crypto integrations. Think back to when Cash App first added Bitcoin. What did that adoption curve look like? How did it affect the market? Or look at how platforms like Revolut or Robinhood integrated crypto. What happened to their user activity? By comparing PayPal's progress against those milestones, you get a much better sense of the relative scale and speed of its impact. Is it creating a similar wave, a bigger one, a smaller one? These comparisons help us understand if this is just another step or a truly transformative moment. It's not just about the number of users onboarded, but the kind of activity it drives and whether that signals a real shift in how crypto is used.
Great pointers. Okay, subsection 3.4, bridging TradFi and DeFi, the super app race. Let's zoom out again. What does this all mean for the bigger picture? PayPal making crypto payments so easy doesn't just validate blockchain for everyday folks. It feels like a huge bridge being built between traditional finance TradFi and the world of decentralized finance DeFi, like a major moment of convergence.
I think that's exactly right. This might be one of the most significant long-term consequences, way beyond just PayPal itself. When a massive, heavily regulated, globally recognized institution like PayPal doesn't just dip its toe in, but actively embraces crypto payments, that's an enormous vote of confidence for the entire blockchain industry. It signals to everyone, especially other cautious financial institutions and regulators, that this technology isn't just for hobbyists or speculators anymore. It's seen as legitimate, secure enough, and useful enough for mainstream financial services, that kind of mainstream validation. It's priceless for the whole ecosystem. It helps legitimize the tech for a huge audience that was maybe skeptical before.
So it's more than just a feature, it's almost a statement. And it puts PayPal right in the middle of this race to become a super app, right? Where one app tries to do everything for you.
Precisely. This move definitely puts PayPal firmly in that super app race, a trend we're seeing pick up speed everywhere. The whole idea of a super app is one platform that blends your money management, maybe your social interactions, shopping, and now increasingly crypto, all into one seamless experience. And the competition is fierce. You've got PayPal, you've got X, formerly Twitter, you've got Cash App, all vying to be that central digital hub for users' financial and maybe even social lives. Cash App already showed how powerful integrating Bitcoin could be for user growth and engagement. And we hear rumors about X Twitter potentially integrating Dogecoin or other cryptos, another sign that platforms see digital assets as key to becoming that indispensable app.
What's really interesting is how they're all coming at it from different angles with different strengths. It's not like they're all copying each other exactly.
Not at all. Each brings something unique. Cash App has that strong connection with a younger demographic and its early focus on Bitcoin. X Twitter have the massive social graph and the potential for viral engagement through things like meme coins. And PayPal has its unparalleled global payment network, decades of built-up trust, and that very careful, compliance-focused approach. The future of how we handle digital money and interact online is probably going to be shaped by these super apps. They're defining how we pay, how we manage assets, maybe even how we interact socially around money all in one place. The goal seems to be making financial stuff so easy and frictionless that you don't even think about whether it's dollars or crypto running underneath. It just works.
Making the technology invisible again. Okay, final section, subsection 3.5, regulatory implications and standard setting. This is crucial. How does a huge move like this from PayPal fit into the often messy, uncertain world of crypto rules and regulations? Are they just following the rules, or are they actually helping to write the rules for the future?
I lean towards the latter. PayPal's compliance-first strategy isn't just an internal choice. It's very likely going to set significant standards for how mainstream crypto payments are handled, maybe even globally. Think about it.
Yeah.
Unlike some crypto-native firms that grew up in regulatory gray zones, PayPal already operates under strict financial regulations worldwide. Their decision to integrate crypto, especially using their own regulated stablecoin PYUSD, sends a powerful message to lawmakers and regulators everywhere.
So because they're a known regulated entity doing this, they kind of provide a working example, a roadmap for how it can be done.
Precisely. Their approach can bring much-needed clarity. When regulators see a big, established, compliant player like PayPal handling digital assets responsibly, it creates a practical template. They can see how consumer protection works, how risks are managed, how anti-money laundering, AML, and Know Your Customer KYC rules are applied in a real-world, large-scale setting. This kind of practical demonstration could actually speed up the development of clearer, more sensible regulations globally. Policymakers might see a viable path forward that isn't just banning things or imposing overly harsh restrictions.
And what about for us, the consumers? Does this regulated approach mean more safety and confidence?
It absolutely should enhance consumer protection. By operating within those existing regulatory frameworks, PayPal is held to much higher standards for security, privacy, how they handle disputes, compared to many less regulated or totally decentralized platforms. That should reduce the risks for the average user, which in turn builds more trust and could encourage wider adoption among people who were understandably hesitant before. And this leads to a really interesting question. Does PayPal's compliant, user-friendly approach basically force other traditional banks and financial institutions to follow suit, to adopt similar compliant crypto strategies just to keep up? Or will they risk getting left behind as the market clearly moves towards more integrated digital asset services, especially with these super apps pushing the boundaries? It could trigger a kind of race towards regulated innovation across the whole financial sector.
Wow, okay. This has been a truly fascinating deep dive into PayPal's links feature. It's definitely clear this is way more than just a minor update. So, To recap the key takeaways, PayPal's move is a huge potential leap for mainstream crypto adoption. It simplifies transactions massively, removing those scary technical hurdles. They're leveraging their enormous user base as this incredible onboarding funnel, and they're seriously boosting the real-world utility of their own stablecoin, PYUSD, potentially making it an everyday payment tool. And we've seen the ripple effects heating up the stablecoin competition, potentially changing how Bitcoin and Ethereum are used by adding transactional demand and providing massive validation for blockchain tech in the eyes of the mainstream. Plus, it puts PayPal right at the forefront of that race to build the ultimate super app, blurring the lines between old finance and new finance.
Indeed. And I think the core message that this isn't just about a feature. It's a really strong signal of a much broader and accelerating shift. It shows how traditional finance is starting to seriously view and integrate digital assets. It really is part of the ongoing evolution of money itself, where those lines between fiat currency and cryptocurrency are just getting blurrier and more interconnected all the time. So, maybe the final thought to leave everyone with is this. As these giants like PayPal push crypto into our everyday payment habits, are we really on the verge of a truly integrated digital economy? One where fiat and crypto just coexist seamlessly, maybe without us even noticing the difference? Or are there still big hurdles hidden around the corner? Maybe philosophical clashes, unexpected market reactions, regulatory roadblocks we haven't seen yet as these two worlds merge. What kind of future do you imagine for your own digital finances in this landscape that's changing so incredibly fast?